Hi, everyone. My name is Phil Blancato. I'm CEO and President of Lattenberg Thalmann Asset Management, Chief Market Strategist for Osaic. Welcome to January the 5th, 2026. Exciting. New year, everybody. Here we are. And we embark on the journey again together. First off, notice I got a big scratch on my face here for those who see me on video. The new puppy, Whiskey, who is quite full of energy, I was playing with her the other day. She jumped up on my face. I think she went to lick me, but she got me on the nose here and gave me a good scratch. So nothing serious, just a cute little dog that's full of energy that's got really sharp little teeth. No big deal. I probably should cover it up, but that's okay. You guys all know me at this point. Anyway, I hope you had a wonderful New Year's Eve. I was lucky enough to spend New Year's Eve with friends. A good buddy of mine, Ed DeLeggi, has a really cool New Year's Eve party every year. Friends and family, we all get together. And as you might remember, I left 12:15, had my lentil soup, very important lentil soup on New Year's Eve to kick the year off like right for good luck. And then shot home, got to try to get some sleep. Got up the next morning pretty early. I think I got to bed by about 1 and got up at about 5:30, something like that. Dropped off the new puppies at my sister's house. Was kind enough to watch the new puppy and my father-in-law, the dog. By the way, Stella's joining me today. No, that's the older dog in the background, Stella. She's a good puppy. She's 11, but she's a sweet dog. She likes to sit with me and when I'm doing my podcast and chill out. She's been back there a few times, but I thought I'd say hello. There's little Stellucci, passed out. She's a good dog. Anyway, so we put the dogs in the kennel and we jumped on an airplane and we went to see the Georgia Bulldogs play Ole Miss. There were more Ole Miss fans than I can even begin to tell you, and it was a good game. I got to give Ole Miss credit. They played great. They really did. I think they outplayed the Bulldogs. The Bulldogs just weren't ready. It was the week off. Give the quarterback for Trinidad Chambers for Ole Miss. The guy would refuse to be tackled. In my opinion, our starting center being out, Drew Bobo, was the reason why we lost the game. Too much pressure on our quarterback. Our running game wasn't good enough, and it caused all kinds of havoc. But let's not get into football technicalities. You got to score more points to win the game. A buddy of mine, Michael Bryan, likes to say that. Yeah, there are things that happen along the way, but just score more points. And they could have still won. 2nd and 3 with no time left on the clock and score a touchdown there, and they win the game. But didn't work out. We were going to follow the team all the way through to the finals this year. But unfortunately, it didn't work out. So my older daughter, Luca, who was at the game with me, sobbing because it was her last game as a student, so graduate in May. So that's it for her. The younger kid, Marcello's got another year, who was also upset knowing it's very hard to get close to have a team that has a chance to win the whole thing and while you're a student and to suddenly get knocked out. Not fun, but that's the beauty of sports. What are you going to do? I hope your New Year's Eve was wonderful. Hopefully it was safe and you did something cool. We always have these fun traditions about getting together and eating lentil soup and celebrating the holiday and new ways to send the year off right. I think it's all quite exciting that we're embarking on a brand new year. So tonight, now I'm doing this Sunday night because I'm hoping to go skiing tomorrow. So forgive me, I'm going to do a Sunday night podcast that'll come out on Tuesday morning. But today's Sunday the 4th. Tomorrow, Monday, January 5th, is for me the last holiday of the season. And if you went downstairs at my house, you'd see our Christmas tree still up. The house is full on Christmas. The outside lights are still on. And the reason why is I grew up being a little, usually a treat or something on the 5th, because the night of the 5th in Italy is, well, it's the 6th is the Epiphany. That's the day the three wise men, three kings show up and give the baby Jesus presents. So if you're not Catholic, forgive me. I'm not trying to impose my religion on you. Just telling you why this day is important to me. But the night before is famously called La Befana in Italian. It's a story about an old woman who didn't help the three wise men find the baby Jesus, and she spent the eternity then searching for the baby every year on the night of the 5th, going into the 6th. It's really the Italian Christmas Eve, because most of the world still, well, no, I think everything's changed. It's all December 25th now, but a lot of folks use the night of the 5th as the eve of the 6th when the wise men arrived and followed the star. And the reason why, it's a way to keep religion in Christmas, Christ in Christmas. So forgive me if I'm doing too much of this. My point is, my last personal holiday is tomorrow. I actually really is the 6th. And I'll give my daughters a little gift from me on the night of the 5th going into the 6th, just to remind them that religion, I think, is still important. It's just my personal opinion. And I'm taking this way too far on this podcast. If I'm offending anybody, I'm sorry. My point is, in a world where it's crazy out there. I mean, this weekend we saw the United States go into Venezuela and capture the president. And he's a pretty bad guy, in fairness. There was a really powerful Wall Street Journal article not long ago about how women under the age of 13 in Venezuela are genuinely kidnapped from their families, taken into gangs, and treated as slaves. That women have very little to no opportunity to succeed. In general, rampant poverty, rampant crime. The country's in disarray, yet it's rich, well, probably the richest oil reserves in the world, some of the richest gold reserves in the world. The country could be very wealthy. Instead, people just take and take and take. And Maduro certainly represents that. Now, if we're doing this for oil or gold or everything else in between, strategic position, and we take over the country, then of course it's a very bad thing. I don't think that's the situation we're in, but for markets, economics doesn't seem to matter. Why I mention it. At a time when the world still got a lot of strife, a war, Russia, Ukraine, which hasn't been survived, which hasn't been finished. The Israel Gaza situation, if with Hamas still hasn't disarmed. That situation, I think, still is tenuous. Granted, there's no more fighting, thank God, but that still hasn't been resolved. We'll see where that goes. And just in our own country, the constant political strife that's out there. So I think sometimes having religion as a way to recollect yourself, having maybe a moral compass or just a place to meditate and go in and think about the world beside yourself, I think is powerful. And that's, for me, that's what I use it for. Anyway, I'm taking this way too far. I'm going to stop. My point is, if for those Italians out there and Catholics, enjoy La Befana. That's the last one that wraps up the holiday season, and we'll try it on through the rest of the year together. The days are getting brighter, but not warmer, that's for sure. It's been certainly cold in New Jersey. We've been below freezing often, and this year is far below November, December, January so far, all very cold. Snow in the whole 9 yards. But besides still being chilly, ski season is upon us. So that's why I'm doing the podcast tonight. Hopefully, going to go skiing with the girls tomorrow. At least one day on break while they're here. And then off we go through the year. So, welcome to the new year. I'm rambling on. I'm already, I don't know, 5 minutes in and haven't got to anything that's relevant to you all about economics. So, for the short amount of trading days that we had, which is just a couple really, the S&P's down 1%. It had a tough week. When we look at what it did over the last week, year to date, we're up 0.21. So the day and a half, the 2 days that the market was open, which would be, no, I'm sorry, just Friday. Just Friday, the market was open. We're up 0.21. But for the week, we were down 1%. The last week of the year was pretty tough on the market. It really struggled. In fact, we saw the market get very narrow. Large cap growth stocks hung in there a bit, but everything else sold off. For example, small cap stocks were down at least 1%. The NASDAQ down 1.5%. The Dow on 0.66. Even bonds were down 0.21. The only thing that did well was emerging markets. And I think that's a little bit of just kind of chasing what the year of next year looks like. So the market really wasn't great. Now you can't look at that. Here's what's to come, everybody, and this is really important. Over the next 3 weeks, starting with next week, we're going to start to get a plethora of data. No more, there should be very little to none government shutdown information in the middle of it. It should be logistically good, strong data. It should be quality of data for unemployment, inflation, growth, GDP, earnings. We should start to get a lot. And I think what you're ultimately going to see is good enough information to hold the market on, but not without volatility. I do think there's a good correction waiting for us. I mean, the stock market's been on one heck of a run. For the 1 year, we're up 16.9%. And that's so if you took Friday's close, so a year in one day, or, including the one day of the new year, 16.9%. That's an incredible number. 3 years, 23%. 5 years, 14.5%. These are incredible numbers. The NASDAQ, 19.9% 1 year, 32% 3 year, 13% 5 year. These are really strong numbers. And when you look back and think about it, wow, what an impact it's had on all of us. So I thought I'd do today is, as I wanted to look back at 2025 for a moment and what we thought was going to happen with the year and how the year worked out. I thought that would be impressive just to do that for a minute. Before we get into it, I do want to have just a couple quick things. One of the things that we have to face with everybody, and this isn't a super important thing, but there's a really good research report I read about Social Security, and you probably heard me talk about how we spend double on Social Security than we do on national defense. Now, in theory, money comes into the system from payroll, employees, and employers, and goes into Social Security. The problem is there's not enough money being taxed to cover the amount that goes out in Social Security. So who makes up the difference? The federal government. So the federal government's responsible for all of it. And right now, the trust fund runs out in 2031. And meaning runs out means we start cutting benefits at that point. So in the next few years, you're going to hear a lot about what happens next with Social Security. And I think some of the easy things out there could be done. Well, not too hard. I think you really could do things like just raise the age from 62 to 65 when you can begin to take some of your benefits. But we just seem unwilling to do that. People live longer, so start the benefits longer. And you don't have to do it for the people that are in their 40s or their 50s, but the people that are 18. I think we got to look at some of these things and realize the world has changed from when Social Security was created. Maybe you got to have take right now. There's a cap on how much you can be charged for Social Security. Maybe you have to raise the cap a bit. So for the folks who make extra, above $200,000 a year, they may have to pay up until 250 or 300. It means you're raising taxes on people, but you got to do something. Because if we don't, we're going to end up in a very difficult situation. Three headlines I thought were really interesting. First off, shrimp. Shrimp are mostly come from India up until this point. But with the heavy tariffs on India, guess where shrimp are coming from these days? The Gulf of the United States. The Atlantic, the Gulf, I guess the Gulf of America, not to get into that one, but and South American countries like Ecuador, countries that don't have the same tax burden. The problem is we used to get cheap shrimp from India. We don't, shrimp is now more expensive. This goes into a good example of where tariffs are being absorbed. There was a cool thing about Christmas tins that I read about Christmas tins are more expensive. Why? Because you can't get tin from other countries without a huge tariff. And we don't make tin thin enough in the United States, so the companies have to pay for the tariffs. So the second one is Nissan. Nissan is shifting car production from other countries to the United States. Why? Because they want to avoid tariffs. That was the intent. Come up with a way to avoid the tariffs to create manufacturing in the United States. So Nissan is yet another example of companies moving manufacturing here. They're going to do it in Tennessee to avoid it. And the biggest winner of the tariff brawl, Vietnam. With the significantly higher tariffs on China, a lot of production shifted to Vietnam. Remember, they were one of the first ones to come up with an agreement early on. And then while they were tariffed higher, they were more than thrilled to have an agreement in place. Why? Because they knew that companies were going to switch from China to them. Remember when Vietnam was one of the hottest spots in the world? What if Venezuela could be the future of Vietnam? What if Palestine could be the future of Vietnam? Countries that were destroyed post war. And here we are, what, 40 years later for Vietnam? 30 more, 60 years later? You're looking at a scenario where, wow, what a change. What if we can begin to shift the narrative to not get too far ahead of ourselves? But I think that's pretty exciting that maybe there is a chance for some of this to work. I hope that some of this happens, especially with Venezuela. The country's got so much power. It could have so much power. And all those people come to the United States because they're just afraid to live where they live, watching the daughters get kidnapped and raped. A lot of them go to other countries in South America or into Spain or illegally to the United States. You think about that scenario. What if there's a way to fix that? Wow, I hope that's what this is. Anyway, my point is, when you think about tariffs, it's working in that manufacturers coming back, and we're working with other countries besides China, which, let's be honest, it's a threat. They continue to threaten Taiwan, and it looks like they're going to take a shot at Taiwan at some point. I hope they don't, because that's going to be very messy. And then the last one I thought that was pretty cool. So Vietnam being a winner, Nissan being a winner, and then something like shrimp being a winner. I love my Wall Street Journal articles. That was kind of cool. The other one I'd make a note of before we get into what's happening in the world is Warren Buffett stepped down. Warren Buffett's a neat character. Certainly the greatest American investor ever. The guy, very, very, really powerful, neat dude. And I think what's amazing about Warren is he's giving all his fortune away, or at least the bulk of it. But he just had a pragmatic approach to investing. What have we been talking about since this podcast began? A pragmatic approach to investing. Don't get overexcited about any one stock. Don't get over exuberant about being concentrated. Be smart. Take your profits. Look for new emerging industries. Don't get overly concentrated. Be happy with winners. Don't try and shoot the moon. Keep the principles of investing pretty simple. You'd be surprised. You can go a real long way in having some success in investing. And I'm hoping that is what we ultimately get to with everybody here. That we have this scenario where, in fact, we are able to give you sound principles to invest in. Why do I want you to diversify your portfolio? The Nasdaq was down 1.5 this week, and the S&P 500 was down 1. A broad-based portfolio did better than a narrow-based portfolio doing just in the Nasdaq. The Russell 2, I made a mistake. I thought the Russell 2 small cap stocks were down more than the market. They weren't, forgive me. Down the same as the market. So being in stocks that are cheaper worked out this week. And I think that's pretty powerful. So I want you to remember being diversified is still the number one rule of thumb. All right. I think any good manager has to be held true to what they believe in. In other words, if I'm going to sit here and pontificate every week for a half hour or so, hopefully less, then what can I do to make sure that who the person you're listening to, one, has good guests to come on, but also, what I tell you, hold some water. So every year we put out a theme, a forecast, if you will. I think ideas that were going to happen in the year to come and things we're going to be ready for. And it's sort of like guardrails on a highway. We put them on there so that we don't bounce in one direction by any too much, but they're a starting point, not necessarily an end point, but a way for us to gauge what we think is going to come in the year and then adjust our portfolios accordingly. So I'm going to tell you what our themes were for last year. I'll tell you if we got them right or not, because I want you to be able to judge if this podcast is valuable for you. So one of our first themes was that the U.S. economy growth would outpace international markets. Our economic success here would be better than international markets. And truth be told, the U.S. economy did grow more. As of now, the U.S. economy grew somewhere around 2%, might even end up being higher than that. Whereas China's GDP came in, around the mid 4% range, but Europe only did 1.4%. However, I would give us a neutral on this one. And the reason why I give us a neutral on this one is because international stocks did a heck of a lot better than U.S. stocks. At the end of the day, international stocks beat U.S. stocks. In fact, if I just look at the one-year trailing basis, when I look at what happened with international stocks, EFA for the year was roughly up 32%, where the S&P was up, call it 17. So while economic growth was better in the United States, the stock market was better in Europe. Now, this was about the dollar. The dollar getting weaker drove that. But, it's still, in the end, I think we got our thesis right, but our equity exposure we could have been smarter about. We thought equities would normalize. And normal equity markets are 8 to 10% rates of return. With the high side, we expected 12%. Market did better than that. Truth be told, the S&P 500 finished the year right about 18% there. So, when you look what the market did, while we did think being overweight equities was right, and we got that right, and we did think corporate bonds would normalize and give us a solid rate of return, we got that right. But we didn't expect the market to have, almost double its average annual rate of return up there around just shy of 18%. And why I mention that is because, we did think being overweight equities made sense, but at the same token, we really thought we'd get an 8 to 10%, maybe 12 on the high side when we got darn near 18%. So that's just something to think about when you think about last year and how the year ended up. So I'd give myself on the first two, U.S. growth, a neutral. Equity exposure, a neutral. Even though we did well and we were overweight equities, we could have been overweight more than we thought we'd get. We didn't think we'd get as much as we did. And the next one, small cap stocks. Now, small caps had a heck of a year as well. Small caps really did well. Small cap valuations are cheaper. The S&P 500, from a PE ratio standpoint, price of stocks divided by how much they earn, is at 22, with the historical average being right about 17. Whereas the PE ratio for small cap stocks is only 13. So the price of the company divided by how much they earn, which is why we like them. But interest rates didn't come down as fast as anyone thought, including us. And the idea of tariffs and what it might do to small caps hurt them. Now, there was a point in time where they were only a couple percent behind the S&P 500. So they did really well. And in fairness, when you look at how they did on the year, finishing up just about 13%, a little over 13% on the year, they were about 4% behind the S&P 500. We thought we beat the S&P 500 in small caps, and we did not. So the only thing I would say is, again, another neutral. Being exposed to small caps didn't help the portfolio, didn't really hurt the portfolio. Really great rates of return. When double-digit rates of returns in equities are still very good. But I give myself another neutral on that one. So while we were overweight small caps and they were good for the portfolio, they weren't as good as being in just the S&P 500. Now, the next one, I thought we did really well on. We thought interest rates were going to remain somewhat elevated, come down a bit over time. We thought the bond market was a great place to be, and we got that one exactly right. Bond rates did remain elevated. When you look at what the 10-year U.S. Treasury did, it's still stuck out there, depending on what day you look at it, between 4.10 to 4.20. While it was down over the course of the year by about 0.25 of 1%, even though the Federal Reserve started cutting interest rates and inflation came down, bond yields stayed higher on the longer duration bonds or longer dated bonds. So 10-year bonds stuck out there, which is really the bellwether for this. And what it meant was by having longer dated bonds in your portfolio, which we recommended early on, having what we call a longer duration or longer average rate of maturity, it was quite good for the portfolio. And in that sense, we got that one exactly right. Having bonds with an average maturity of around 6 years worked out really very well. And then another theme that we thought was going to be very critical to the markets, housing. That housing would stay in tight supply and prices would stay higher. Affordability just would not come down, and it didn't. Right now, the affordability of homes is the worst ever in the United States based on how much the average person earns per year versus how much homes cost. Homes cost around 430,000. Average person earns about 80,000 bucks a year. You divide those two, that's the worst number ever. We're just not building enough homes. And then with interest rates being high, especially going into the beginning of the year, they didn't come down a heck of a lot. As I just mentioned, the 10-year yield, which is what interest rates are based off of. When you put all that together, then you have this scenario where, in fact, being in bonds was a good idea. Being longer dated bonds was a good idea. And we got that one exactly right. Three other themes that we just absolutely nailed was we thought energy, AI, and crypto would have been very important areas to watch, whether it's the explosion of nuclear in the United States or around the world, or it's crypto having a massive climb in 2024, sold off a bit in 25, but still being all the rage with all the new markets and the servers and the systems, the new ETFs that were launched. That's an area that was key to keep an eye on. And then finally, energy, this rapid demand for data center energy, AI, power, all became very critical areas to watch and be aware of every single week and what those markets were doing. And sure enough, those became far and away the headlines that dominated that AI trade, the new energy trade and where it's going, and certainly what the crypto markets were doing. So you put it all together, and I'd say we did okay. We had three neutrals and we had three corrects. No wrongs. We had no straight out wrongs, which is pretty good. So of course, 6 out of 6 being either neutral or right, or 3 out of 6 being totally right. Not bad. I think that's pretty good. I think hopefully that makes you understand that the cat it's yammering away at you every single week is actually pretty accurate with the folks that I work with. Remember, it's not just Phil Blancato. It's myself and a team of 19 people in New York City that we work tirelessly to honor the money that people have given us to manage and tirelessly to make things like this podcast and our research reports and our white papers good enough that you all can get something out of it that's of value, that helps you with your portfolio management or just understand markets or have a better understanding of what to do with your money. We take tremendous pride in that. And I don't know of another firm that's willing to do what we did. Find me another firm that's willing to say, sure, I'll tell you what I think is coming in 2026. We're going to do that next week. But I'm willing to say, here's what I thought of 2025 and whether we got it wrong or right. Why? Because who am I not to be tested on what I do and make sure that what we do, excuse me, and that we get it right once in a while. Let me see how Stella's doing. Oh my gosh, Stella's passed out back there. Stella, there she is. She's okay. She's just chilling out, having a good time. All right, everybody. So a quick podcast this week just to get us ready for 2026. There's a lot to come in the next few weeks. January is going to be a very busy month, so I don't want to bore you with a long podcast. I'll give you my quick shout out of the week. My shout out goes to Jim Moylan. Jim Moylan recently passed away. He was a Ford engineer. You know what Jim Moylan was famous for? How many know about the Jim Moylan arrow? Well, when you look at your gas gauge, have you ever noticed that little arrow that's on one side or the other? And the reason why that's so important, that little sideways pyramid, it tells you which side the gas tank is on. So when you go to pull up to the pump in your car or in a rental car or somebody else's car, you look at the gas gauge to know which side you got to go on. Otherwise, you got to back up and go the other way. Jim Moylan is the guy who invented the idea to put an indicator on your gas gauge as to which side the car is going to be filled up on. Here's to Jim. I know I've used that a lot of times. And he was a quiet guy, not didn't want to be in the limelight. And to his credit, his simple little idea. The funny story was he pulled up to a gas station once in a Ford car, got soaked because he had to get out and realized he was on the wrong side, had to get back in the car, uh, fueled the car up, went to his office that day and suggested it to Ford because he didn't like getting wet and he thought it was a good idea. And it stuck. Good for Jim Moylan. My daughters are going back soon. Hopefully, before we wrap this thing up, I'm hoping Luca will join me because I know Marcella had a really fun time. If you didn't catch it, Marcella joined me last week just for a few minutes, and one of my dear friends caught it. I really appreciate that. It's just so funny how this podcast does some really cool things. When you think about some of the cool stuff that's out there and people that I really admire. My friend Anita, I want to give her last name because maybe she doesn't want it out there. But my friend Anita mentioned to me how her father was an executive, I believe it was ABC, and she got to go and go to work with her dad one day and see what her dad did, and she was all inspired by the work that her father did. And, she left me a brief note just saying that, maybe my daughter would feel the same way. I don't know that I'm going to ask my daughter if she did, but it was nice to have her on to get a little bit of insight of what dad does every week and how many people we reach thousands of people with this podcast. So it's very flattering. So hopefully you got a chance to listen in to her. She was only on for a few minutes, but she's a wonderful young lady. And I'm very, very proud of her. And it was so cool that my friend Anita picked up on it and sent me the sweetest note. And it really made me feel great that she mentioned it. So Luca will still be in town by the next podcast. She leaves the next day, the 13th, back to school. Marcella on Sunday, a week from today, back to school. And things like it is what it is. The holidays are wrapped up. Remember, La Befana is Eve of it is tomorrow. And then we go from there on through the year. We'll get there together. Have a wonderful week, everybody. Welcome to 2026. We're going to have a great time figuring it all out together. Thanks a lot. Bye-bye.